Good evening. Ira Epstein with your metal market wrap-up, and this wrap-up is for Monday, April 1st, 2024, just getting on to 6:30 p.m. Central Time. Welcome back from Easter. I hope you had a great holiday. I did. And I did what I said. I didn't even look at the markets on Thursday, Friday, or Saturday. I mean, I didn't read anything to do with finance. And every now and then you got to, as a broker, walk away and do those type of things. When we look at the energies, you're getting a bit of a bounce tonight. Rebob gas has come back into the 270s, the low 270s, but it's been a heck of a rebound. I was wrong that market, got long too soon and didn't do well in that. Didn't wipe it out, but it was not a good trade. Stock indices. Let's talk about what's going on and why they're down a little bit right now in a number of them. Let's talk about the week and take a look at what we've got coming up this week. Tomorrow morning at 7:55, you get retail sales. They've been running 3.5% to 4% increase. Factory orders come out at 9 o'clock, but this is what the market's going to focus on, and this is what this week is dedicated to. This is a week where we get the JOLTS report, the jobs, openings and labor turnover survey. That's going to come out at 9. On Wednesday, we're going to get ADP Challenger Gray, I believe. Then on Thursday, jobless claims. And then on Friday, the big report, the U.S. jobs. What is the market looking for? The market is studying real hard. Do we have inflation falling? Are jobs weakening? They're looking right now, the estimate, about 205,000 new jobs, which is down from where the market had been. But unemployment, they're looking for it to revert back down to 3.8%. Now, a number of 4% unemployment would certainly get the market's attention and say, okay, they got the market going in the direction they want. A number of 3.8 or even 3.7 probably says the market is too strong. Unchanged from last week, it's a push. What do you do on the unemployment part of it? So we'll see what happens. You know, can you get a 1% standard deviation from the 200,000 jobs to 170, 230? You could, but the market's been pretty accurate recently on their calls. API numbers are going to come out at 3:30 p.m. Now, while I was out and while you were out, we did get a number of other reports in the marketplace. We had the PCE come out on Friday. On Thursday, you had the acreage report for the grains and you had ending stocks reports come out. You've been all over the board because people that trade those markets on those days got to be careful. When you come back from an extended holiday, you get all kinds of crazy action, especially an unusual one where you get a lot of key information on a Friday where the markets are closed for the religious holiday, both in stocks and the futures markets. And then you're dealing with that as you come into Sunday, Monday trade. And that's what happened today. Very frankly, the stock market started off on a stronger note today, and it ended up on a poor one. The gold market has been on fire. Is the market going to 23,000 on this level right now? Why not? Here's the unusual thing. You're looking at a dollar that soared today up nearly 50 points. And yet the gold market was up very sharply during the day. Interest rates were climbing. Now tonight you're getting them to drop back a little, but when I came in this morning, I was looking around a 4.2, 4.23 on the 10-year, ended up at 4.31 in a fraction. Then we looked at what was going on with the probability of a June rate move. Well, suddenly tonight, you're down to under a 57% probability of that for June. So the market is starting to take out to a large degree the possibility that the Fed's going to cut in June. Can it come right back in? Sure. The market is going to focus. I want to make this ultra clear. This week on jobs, then you're going to start talking about the CPI to PPI numbers just the way you always do. Push numbers don't get the Fed to move. You've got to get numbers that are worse. So if you get numbers that are flat, well, the market was looking for that and it doesn't do anything, it'll be another one of these markets where can you get a 2% drop in stock, which we haven't had. If you take a look at the gold market, what can one say? I mean, if we look at it, you're up $32 for the week already. I mean, it's just a run to the upside. The market took off to the up, as you can see here. You have higher lows, higher highs, which is bullish in the market. It's over the 18-day average. Big support now at the 22,000 level in the marketplace. And the market did get over and has stayed over on Thursday, today, and now going into Tuesday. So it's 3 days in a row over the upper Bollinger Band, and you are overbought. So it is a market that at any point here can give you, for no reason at all, a break in the market. But I think just under the Bollinger Band from 22.55 on down is where the big support's going to lie in the marketplace. I don't like when the markets are overbought because I teach and I practice that when you get a market that's overbought, you don't typically get really deploying of new money. Embedding is different than being overbought. The gold-silver ratio moving back up into the 80s right now. In fact, it's 89.15. The highest it's recently been here is near the 91 level. So gold's come back over the past 72 hours and done very well for itself. And the silver's caught in the sideways action against the 18-day average. It's got a lower low, higher high. It's trying to figure out what to do for the next part. In the copper market, what we saw on Sunday was that the manufacturing PMIs, both private from the state government of China and Caxton, the independents, both showed that they had picked up. So the market takes one good month and says, finally, the Chinese stimulus programs are having an effect on that. I can't argue that yet. We haven't seen factory gate prices rise, which is a good thing, but real estate is in the toilet. Normally March, I don't know if you're aware of that, sees an increase in China home sales, property sales of 93% over February. It was 46%. So it's half of what it has been. You might say, well, it's still got some sales. Yes, but nowhere near what the developers need to move the property that they already have going on. And the government is telling the private banks, well, let me say that correctly, the state banks, you have to lend more money. Now, you do understand if you're running that bank and when it loses money, and it will in this type of environment in the short term, will that banker want to do so because he's scared of his head? What do you mean you're losing us money, even though the directives come out like that? You've got a higher high, lower and low in the platinum. Notice I've moved to the July contract. And in the dollar index, it's reigning supreme. Why? Think about this. We have what's called a race to the bottom. Who can cut rates first? That is going to be the big question. And you don't have to buy into that, but I do. I think the European Central Bank wants to move quickly. You're starting to see certain governors wanting to do that. The Bank of England, who knows? It's a difficult call right here. We already know that Japan is moving to stabilize the yen, but we haven't found the zone yet where they're going to intervene to support it. They threaten with words all the time. They haven't done anything. They are going to stop buying. In Japan, though, they're letting their balance sheet wind down. So they're not going to be the huge debt buyers that we had. But very frankly, when you're sitting here at 4.3% on a 10-year note and a bit higher shorter term than that otherwise, you're going to find buyers for all your debt. That is what the issue really is at this point in time. Now, there's another thing you've got to keep your eye on the metals. If it's a race to the bottom, which banks can start cutting? Where do they see the data's enough where they can do it? Is that inflationary for the gold? Yes. The reasons you cut interest rate is you're trying to spur your economy on. When you do that, the crude oil gets a bid, the gold market gets a bid, the inflation commodities get a bid because you're trying to reinflate, right? They can say, well, no, our economy's in a tailspin, we need to rescue it. But in the end, rescuing involves just what I said. There's no getting away from that. So it's going to be a really interesting time frame for these markets. I cover that and a lot more every morning in my morning subscriber videos. At 5 in the morning, I talk the futures markets. That's Central Daylight Time, AM. So I'm sitting there, I'm trying to throw out trade ideas. What's happening in Asia, Europe? I discussed that with you at the beginning. I bring up the reports, if any have come out, where they're at. And we go through 40 charts. Well, sometimes more than that, because I'll cover the daily and the weekly charts often, looking for trade ideas in the marketplace. Sometimes I'll say take full positions, which is a minimum of X amount of contracts, sometimes half that. It's all in the instructions that I lay out there. It's very, very simple. Then I match it up at 9 o'clock when I start talking spiders ETFs. Now, the reason 9, even though the market opens at 8:30, I want that first half hour of trading to get into these markets right through here. And number 2, we often see the end of the U.S. data reports at 9 a.m. So I want to get them. I want them to come out, and then I want to talk to you about them where we're at. To find out and look at this, all you need to do is go to iraepstein.com under the word research. It's right there. It's the simplest way you can do it. You can move your icon to the top up here. That'll get you your mouse to the top here. There'll be an icon that shows up if you're on a PC or an Apple product, and boom, you can get in, or iraepstein.com research. It's all laid out right there. I'm Ira. You have yourself a good day. It's good to be back, and I'll catch you first thing in the morning.